Hey guys, Kim Wasabi here. Another daily update. Guess I'm doing these every day now. Have a nice candle close here on the daily. Higher high, above all-time highs, so that's a great candle close. So we do have the trend that is maintaining higher highs and higher lows all the way up here. So it's fair game to buy the dip with a stop loss down there if there is any dip that comes down there. There is a likelihood that we will get a pullback in the coming days, maybe over the next week, um, to fill in this area. The thought being all of these orders, stop losses, breakout traders, all that, just want to shake them out a little bit. But likely we will shake them out without changing the trend. You want to maintain the higher highs and higher lows. If you close underneath there, you'd have to expect a retrace, some kind of ABC here, which don't really want to see that, but it depends on how much liquidity was grabbed up there and how much they need to pull it down to drop those off. So they'll be taking these orders here and popping them back. We got a nice move out of a cycle low, so we shouldn't go below that if we're going to maintain the cycles. If we do go below that, then you're doing some kind of ABC, grabbing this liquidity, and then you wait for the next cycle to see if you can start an uptrend. But so far it looks really good. The trend appears to want to stay strong. The relative strength index on the daily is just kind of gathering strength, so we'll see if we get a pullback. I do want to zoom into the current move up, and just like I always do on my charts, I want to mark off the fair value gap. It starts with this candle right here, and we'll go to wherever this candle closes, wherever the wick is. There's going to be a gap there. The gap can come down, probably this far or something like that, but it often will end up filling this area, and it's potential that we're going to start doing that over the next few days, especially after this candle close, and then we'll have that marked off as a gap. But it's coming. It'll come tomorrow, most likely, unless if this just retraces all the way down here, then that'll be a bearish engulfing candle and kind of a trend reversal. So I'm going to keep that box on there, and I'm going to move this over to a 4-hour chart and kind of zoom in to what we got going on there. So we'll start by taking some measurements. With the fib extension tool, I wanted to measure this leg and compare it with this leg. We'll go wick to wick here. It's already completed. And there we are kind of in the sell box. If we go on closures, start there, just from the close. Yeah, I made it right into the 1272. No closes beyond the 1.618. So those, for now, they do match. So if those match and they complete each other, basically, we got to look into this one and see if this one is complete. And there's an argument to say yes, it is complete. If you take a measurement of the first leg here, if you watched the video yesterday, what I was matching there, I'll measure that leg and then project from the bottom of this one. It came right to the 100 fib extension there. We're damn close to it. Very, very close. So that can be complete, especially on closures. 4-hour closes. Let's see what they give. Yeah, it's closed right in the 1272. So this move up can be complete. As per Elliott Wave, it might have another leg higher, which I'll show you how that could potentially look. Because what I'm kind of seeing here is the current move down is like a distribution type leg down where they're selling. It doesn't really match these quick legs down that were just shakeouts. This one is more distributory, and it kind of resembles this move right here. So if we were to draw it, we might have this leg currently repeating right here to come take this liquidity here and kind of make a potential fair value gap starting there, because your wick would be there. Potentially bounce up from there. So we'll draw that idea in red. Maybe just an ABC. After which you could repeat this leg, break the high, maybe 77. And then maybe sometime over the weekend repeating this leg here to come down here. Maybe fill in this gap, maybe come halfway, or maybe come all the way down to the top of that wick at like 70K. That would get you probably back in this consolidation. It would look like an upthrust after distribution, and you'd have a lot more sellers up there, a lot more stop losses to hit, so that you could repeat this move from right there and just come up here to like 84 to 88,000, something like that. Maybe 90. Maybe you get there already, but I'm kind of expecting that to kind of take a while to get up there. The trend over the past few months has just been choppy, and we might continue chopping like that all the way up to higher targets before maybe accelerating faster. But always pay attention to your trend, where your closes are. If you're still closing higher highs, this is where you would look for a higher low based on the empty space theory of how much higher this one is. Look to there, look to buy there around the 11th or 12th, somewhere around there, to maintain your trend, and then you can continue up. Keep in mind, guys, this is predicting the future that, hasn't really happened yet. I'm just using patterns to kind of see where it could go. So if this pattern does repeat and then you get that move, that would make this a 1, 2, that's 3, this is 4, that'll be 5, and then you have like an ABC back down as per Elliott wave before continuing that leg up. That's kind of what it would look like. So maybe we finish the week out kind of strong, close a weekly candle fairly high, and that'll maintain the weekly uptrend and kind of get things accelerating a little bit. So that's a pattern to watch out for. A double top similar to that right here. Break above that with conviction and start closing, 1 hour to 4 hour higher high. Buy the higher low, probably the daily open there, and it might just keep pushing into something a little stronger. And then your retrace will come later, which would be great. I mean, I'd like to see this thing start, getting going, but so far it's just kind of chopping around, and it has a lot of liquidity that it probably wants to dump back down there, get some sellers, and market will move down as long as there's participants that are willing to sell it. So don't want you to be caught off guard. Look for this liquidity to be taken, because this liquidity was taken up there. So kind of a choppy range, pop up, pop back down, and then go. This will be like your point of control for this area. This will be max liquidity to keep pushing. That's the way I'm kind of seeing it for now. Hope that makes sense. If there's any questions, throw them in the comments below. I'll try to update a more macro view on the way things are looking, more, a couple months out, maybe even the next year, of what I'm kind of seeing. I'll try to do that soon. So until next time, have a good night and keep your stops tight.